What's going on, everybody? It's May 20th, 2023, Daily Log episode number 5, volume 2. Today we're going to cover ES and what unfolded yesterday. So this is a day later that I'm posting. I let you guys all know that I was going to post it at a later point just because I wanted to take the day off. This week was a little just stressful for me personally. And I'll go over that at the end. Basically, how to handle weeks like this where things didn't go in your favor and how to handle that, how to pull out the pros and the cons. I think this week was exceptionally difficult compared to even the last few weeks. I think the only days that really cleared up were Wednesday and Thursday. Um, Even yesterday on Friday, there wasn't that clean a price action. Nothing really unfolded. And that's due to a few reasons where we already met weekly objectives. We already reached into things on higher time frames where you can expect, price not to expand any further on a Friday. So it's pretty much a classic TGI Friday, which means that you're just going to expand back into the weekly range that opposite to where we've been expanding. So if you've been bullish all week, classic on Fridays, you're going to expand back into the weekly range. So expect a retracement on a Friday. Vice versa for if you had a bearish week all week, expect on Friday for price to retrace back into that weekly range. So you'd be looking for a bullish setup. If we look at the daily time frame here, we accumulated inside of that fair value gap, and we expanded on Wednesday and Thursday above the buy side liquidity. We got above the Sibian here, so that's good news for us if we want to continue to see higher prices. I'd like to believe we're going to see 42, 44 next week. That's what I'd be looking at for next week going further. Just to make note while we're here, this daily fair value gap, that's the only point of interest for me that I'd like to see ES basically reject off of. If we collapse beneath this, then that would be problematic towards me. I don't see a reason for price to retrace back down into here. So keep an eye on this on Monday and Tuesday, how we react to it, and if we can send price into the buy side liquidity at 42.44. Going down to the 4-hour time frame and what happened yesterday, we got above buy side liquidity. I don't have it marked out, but the relative equal highs in here at 42.24 just poked ahead above it, and then we saw an expansion lower. We're also moving into the weekly volume imbalance. It's not on the continuous contract. In ICT's latest review, he goes over that. So go ahead and check that out. If we go into the 1-hour time frame, prior to the open, we had the Fed speaking. So it's another reason why I was just electing to take the day off. With the Fed, it can create very uncertain price action. I was surprised that there wasn't as much volatility, but I believe that was off the backbone that Wednesday and Thursday we got large expansions. So that took us out of the range. The Fed, there wasn't much to it. Prior to the Fed speaking, you could see here we took out buy side liquidity, and this was prior to the open as well, leaving relative equal lows in here. So it was much like Thursday where we left relative equal lows. We were taking out buy side liquidity. And if you're in a bullish environment, you want to be taking out sell stops before you're going higher. You don't want to be buying in a condition where sell stops have been remained. That's not a good sign. You want sell stops to be taken and then see higher prices. So in the morning session, there really wasn't much in here. It was a really sloppy day, so it's not going to be a super long video. I think yesterday was pretty terrible, to be honest. It's very, very happy that I sat out of it. In here prior to the Fed speaking, nothing in here. This is where price is just trading aimlessly, waiting for the news event driver to take place. And that's why you don't want to position yourself into the market before something like that, where a major news event driver is going to unfold, because it creates uncertainty, and it could be very problematic where price is just time distorting inside of a certain area. So took out buy side liquidity here, and then we saw a displacement lower. There's a small fair value gap in here, but again, there was no respect to it. It was just trading aimlessly to me. As soon as we broke underneath, basically this is when the Fed spoke, we displaced lower, and there was a small breaker in here. If you go out to a 15-minute time frame, it becomes a little bit cleaner. It's all of these consecutive last down close candles. It's the lowest down close candles in the series before price ran the high. So we have a low, a high, and then a lower low. So these last down close candles are your bearish breaker. And if you extend out the lowest down close candle, this one here, extend it out in time, You can drop down to a lower time frame and utilize that as a potential entry pattern. It's not my particular liking. I would like things coupled within it, meaning that if there was a fair value gap in here or an inversion fair value gap, something coupled within it, it would create a little bit higher probability for me, especially off the backbone of the Fed speaking. It's not something that I would particularly like taking. I know ICT did, but that's just him. He has experience with this, so don't feel as if he missed out on something. To me, it's nothing really noteworthy for me. Small volume imbalance in here. Retraded to it multiple times inside of that breaker. So you can see here, small little volume imbalance, just retrading back to it, redelivering. Go down to like a 1 minute time frame. It's still very, very sloppy in here. And this is not something I would particularly want to be a part of, but it is to note how we use that breaker and then set price lower into a discount. So if you go out to a higher time frame, like a 1 hour, it can become a little bit more clear. This is our swing low to swing high up here. And if you're ever in a bullish environment and you're shorting, you're looking to short into a discount because price would want to seek a discount before going higher. So we have a discount for value gap in here, a BISI. We've been making higher highs, higher lows, seeking buy side liquidity. So you should suspect that price should drop down into a discount, take out sell side liquidity. So a short trade is permissible in these conditions. It's okay to short oppositely to where we've been going, as long as you understand where you're at exactly in the market. The highest probability is to look for longs, but if this is the only thing it will offer, then that's perfectly okay in my opinion. So that's the reasoning. I guess you could have went short in here, but to me, there really wasn't much to note. So that's basically going to be it for ES. I'll touch on the dollar really quickly. Dollar, to make note, we climbed right up into the Sibian here that we've been looking at. So if you look at our dealing range, this would be your dealing range high all the way down to our low here. Reaching up into a premium, this would be your premium PD array. This is a bearish order block as well if you extend out the tail end there. So just reaching up into a premium. My hope is that the dollar will continue lower from here because the dollar has been rising alongside ES, and I don't particularly like that. I want them to be moving in sync with each other. So right now it was very decoupled this week, meaning that they're moving together and it creates problematic analysis for me. I need these to be moving oppositely to really have confidence in the market. Looking at the weekly time frame, we closed underneath the weekly fair value gap in here. So the wicks do the damage. The bodies are telling the story in here. Bodies are telling the story how we closed underneath that fair value gap. So do we see a displacement lower next week? I would elect to believe so. I think this is a false bull rally, in my opinion. We'll see what happens, but in my opinion, I would like to see dollar roll over because I don't see ES rolling over going lower. I'd rather see the dollar go lower and attack the sell side liquidity. That would be the best bet for us. If we touch on, this is the most important really to the whole video, is the account here. So I put in the Telegram yesterday, I wrote a pretty decently long note, just so you guys can understand, especially from a newer student perspective. And if you haven't gone through a challenge or you haven't gone through an account before, really the ups and downs to them, and understanding that it's perfectly okay to have a week where you're not completely dialed in or your setups weren't there and you took a couple losses in a row. Just pulling out the pros and the cons to it and not focusing too heavily on the cons, forgiving yourself for some mistakes. And in my opinion, this week I did everything correctly. I followed my system correctly. Thursday to me was the only viable option to actually have a good day, but unfortunately there was nothing in there that really permitted me to profit off of. I did take a trade that day and I ended up at break even. And by that point, you guys heard it in my voice, I was just done for the day. My mental capital was spent from the week. It was a long week, really hard in the first basically 3 days of it. And that will happen from time to time. You know, when you keep a long-term perspective in this game rather than focusing on day to day or even trade by trade, it will really help and open up your perspective. Because if you put a lot of emphasis on this trade has to make or break my career, even though if you don't really believe that, obviously when you say it out loud, it doesn't make any sense. But when you're trading emotionally, it does come into fruition. whether or not you realize it, because you get so laser focused on that one moment and on that one trade. But if you just in that moment in time, or even in that week when you're reviewing, just go back to the idea that you have a lot of time. You have so many more months, weeks, and years ahead of you in your career. So if you get super laser focused on one day, just pull back your perspective. So for me, I only lost 1% this week, and you guys saw that I took 3 trades in total. 2 were at 0.5% loss, and the one was break even. And I talked about how dialing back your frequency in these environments, dialing back your exposure to it, is going to help you tremendously, rather than upping or increasing your frequency in your exposure to the market, because you're just burning mental capital. The more times you expose yourself to the market, the more chances you have to where you're likely to self-destruct, really. And you can see here, my equity curve is not making huge spikes and dips and wild movements. Your equity curve shouldn't look like up and down like a child with a crayon. It should very much look like an uptrending market where you're making higher highs and then having small retracements back, and then making higher highs again and then smaller retracements. And the way you do that is dialing back your frequency and making sure that when you're taking losses, you're reanalyzing yourself, you're reanalyzing the market, and you're dialing back your risk. So if you took a loss, you reduce that risk to 0.5% until you make back that loss. So if we look at this week, we had our loss here on Monday. Nothing was taken on Tuesday. This was our Wednesday trade in here. And then this was just a limit, so ignore that. And then on Thursday, this was basically the break-even trade. So 3 trades in total for this entire week. And I'm very happy with that. Very, very happy. To me, I displayed a great deal of self-discipline, self-control, not over trading, not going back into the market after I lost, letting the market come to me rather than me chasing it. And you can see even last week when we were profitable, I only took 3 trades as well. I can't emphasize enough about dialing back your risk and your exposure to these markets. When you do that, you're going to see a huge jump in your progression, because I believe if you're taking way too many trades, it's just going to weigh on you heavily mentally. I know everybody's different, but I've gone through every style. I've taken 20 trades in a day, 40 trades, 60 trades in a week. That type of trading is not sustainable over a long period of time. And when you just be patient, you wait for a little bit better high RR trade where you're able to maximize more, you're more selective. Those type of trading environments and that type of trading is suitable and it's sustainable over a long period of time. And I believe a lot of profitable traders choose and elect to trade that way because of mentally it doesn't exhaust you. And that's personally my style, and I'm trying to teach in that way because I think it's the best way in my opinion. So am I mad or upset? Not at all. I understand my system. I understand myself. I understand that over just 1 trade, 2 trades, we could be thriving again and be right back to where we're at or even better. And that's not even the goal. When you're in drawdown or if you've been taking losses, you can focus too heavily on the money that you're losing and you're trying to get it back. And that's not the way you need to be thinking. You need to be thinking just about your system. Does my system allow me to enter the market? Does my model say to enter? Do my rules say for me to enter the market? Where does it say for me to exit? I'm not thinking about the money, because as soon as you start thinking about the money, that's when everything else goes downhill. And especially in these challenges, that's what happens to a lot of people is from experience is you'll focus way too heavily on the money. Like catch yourself after trading hours thinking about how much, you'll be calculating in your head. Oh, if I take this trade that I could be back to break even or I can get back. Trust me, that's not the way you need to be thinking, because all that inspires is fear and greed. All you need to be focused on is, can I execute my model with perfection? And that's all I focus on is, can I execute my model with the rules and the things outlined for me? And if I can do that, then I'll be profitable over a long period of time. So that's going to be it for me this week. I'll probably do a weekly forecast tomorrow, and we'll see what happens next week. Enjoy your weekend, everybody. Until next time, good luck and good trading, everybody. Be safe.